G'day everybody, this is Johnny Civil from Acorn Wealth Corp, and we're going to take a look at what's going on in the current markets as to what could possibly happen next, and have a look at some really interesting short setups that you may be interested in taking a look at as well. So let's firstly start with the SPY, the S&P ETF. Now basically, if we're looking at a daily chart here, and there's a few things that are going on. So I'm going to start by zooming into the hourly chart to talk about the patterns that are evolving. Now, patterns are, of course, very important because they estimate that 90% of the volume each day comes from algorithms, which make decisions using patterns. And they estimate that 60%, and I say they, this is a recent report from JP Morgan, they estimate that 60% or more of globally managed money is algorithmic based now as well. So let's take a look at the patterns. Now, firstly, what you can see happening here, I'm going to make these lines bold. This is what we've just come through. So as you can see here, we had a left shoulder, then we rallied up, creating a head, pulled back, and then we had a right shoulder. So here, as you can see in this part of the chart, on the hourly time frame, we had a head and shoulder. So we measured the head and shoulder, and this is what we've been talking about with our students for these last few weeks to prepare for a sharp downward drop from this area around 293 down towards the target. There we go. The target of 286.50. As you can see, that's played out pretty much perfectly. The head and shoulder has dropped straight down, and we hit that target. So now, what kind of pattern do we have now that head and shoulder has played out? Well, if you look here, and we look at these, look at the way we bottomed out in these last few days. Let me turn the chart upside down, and you can see another possible head and shoulder. So there's the rally up, right? There's the head, right shoulder. Now, of course, this is upside down, so I'll turn it the right way up. So if we look at that, obviously what we can see here is we can see that we have a possible inverted head and shoulder. So if we measure the distance of this, right, if we go and measure the distance from the neckline to the head, there we go, there's that line. Make that a little bit bigger. You can see that there's a possible rally that would take us back up to around this level, around 291 to 291.50, which, as you can see, would take us straight into where the resistance is from that previous upward channel. So we've got a possible rally to 291.50 straight into resistance. That's what that's kind of indicating. Now, if we go back to, so if we now zoom out, and obviously this would also be where we basically broke down from. You can see we broke down from that 291, 291.30 area here on Thursday. 291.24, in fact, was the high of that candle. So it would bring us back to that area of resistance also. Now, let's take a look at the daily chart to zoom out a little bit. And actually, just before we do that, I want to point out one other thing. So again, I'll just delete this line here, or move that out of the way. Here's the other thing that we've also got to be aware of on the S&P. Now I'm going to change to a different template just so you can see it clearly. You've got all those head and shoulders going on, but on top of that, there's also, if we connect the highs of the rally again on the hourly chart, there you go. And we duplicate that line, drag it down. You'll notice that also lines up pretty much perfectly with the bottoms. So you've also got, on top of those head and shoulders we just talked about, you've also got an upward channel. And an upward channel, once again, is a bearish setup, which would have a target down here of around 284 to 284.50. So you've not only got those head and shoulders that are at risk, and we can once again, let's draw on the head and shoulders inverted here. So you could basically see one, we could just see it go straight down. If we do have a rally, we're looking at that rally up to kind of the 291, 291.50. So you might poke through a little bit back into this channel, but you can see all the patterns so far that we're observing here are bearish sentiment. An upward channel's bearish, head and shoulders bearish. So all these things are kind of big warning signs. Now let's go to the daily chart now, as we talked about. Now on the daily chart, you can see that let's just move these lines out of the way for the time being. You can see that we have this upward channel. Let's make this a bit clearer. You can see we've had an upward channel on the daily chart for the S&P. There's that. You can see we've been bouncing along all of this, and with an upward channel is bearish. That would have a target, if you measure that, a target of down here to 270. And then on the macro scale, we've also got an upward channel, as you can see here, which is also bearish. So there's a lot of things that are kind of putting the market on red alert right now. Now, if we zoom in, so you'd say, well, look, but the market's been going higher and higher. You know, it's so strong. Well, let me also challenge that as well by actually looking at stocks in the market. So if we actually zoom in and look at stocks in the market, by looking at the amount of stocks above their 50-day moving average, this is a representation of that. This is what percentage of stocks are above their 50-day moving average in the entire stock market. Notice that ever since June, this has been going straight down. In June, 72% of stocks were above their 50-day moving average. Now, only 30%, 31% as of today, are above their 50-day moving average. So people saying, oh, the market's going up and up and up. Well, actually not, because the stocks in the market have been going down. So basically, we've gone from 70% of stocks above key support to only 30% roughly of stocks above key support. So no, stocks in the market have actually not been really going up. More have been breaking down below support than actually in bullish moves. So when you scratch beneath the surface, what the market appears to be doing isn't really what the actual market is doing. So this is why, again, it's a key time to really know what you're doing. Now, on Thursday at 12 Pacific and 3 Eastern, I'm going to be doing a special presentation at Wealth 365 on how to basically play this, and we'll be looking at some of our favorite setups and going into how to read all this data and some of our other really special smart money indicators. So don't miss that. It's going to be awesome. It's you can register. It's free. It goes for about an hour, and this will be on Thursday at 12 Pacific, 3 Eastern. You just simply go to acornwealthcorp.com/wealth. Now, some of the stocks we've been identifying, because this is the key thing, we've been looking at the way these divergences have been happening. So we've been identifying short setups now for months, so you can take advantage of the really juicy setups, because they've been dropping now for a while. I mean, just have a look at these, and these still look good. ENVA. Now you'll see my smart money indicator down the bottom I like to look at. Tells us whether smart money is going in or out. ENVA we found back in July, and then we also identified it as a short a little bit after. You can see that there was a rising wedge, beautiful setup. Breaking down, you can see that smart money was going down, 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 down as the stock was going up, 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 up. This is broken down now from $37 to $26, has already hit one of our first targets, our profit targets, but this looks like it's going to drop even further. There's ENVA. Insiders have been selling tons. Also another setup where the smart money has been selling. Again, look at this. Beautiful head and shoulders. Left shoulder, head, right shoulder. This was a short setup for a breakdown below 22. The first target of 18 already hit, now breaking down even further. This still looks excellent. Smart money, an insider setup where the smart money is selling. This looks beautiful. Again, already hitting its first profit target and still looks like it's got more to go. SPPI. This again, upward channel, breaking down with this. You can see this head and shoulders here, that it's just broken beneath the neckline. So it's hit the first target already of 164, breaking down from the 180 level that we identified it at or found it at. But this could go even lower, down towards 148, as you can see the head and shoulder extension from here. Hang on a second, from here down to there. You've also got SPPI looking great. Again, nice big head and shoulder. Now the original target here, as you can see, there was an upward channel, is how the head formed. So that's when we identified it as a short with a target down to $16 and change. It hit that easily. So some nice easy money if you were short that. Leveled off, and then as you can see, this big red bar creates what we call a flag formation. So we measure the flag. It's about the same measurement, and then you measure that down below the breakout point, the same target as where the support of the head and shoulders is. So all the puzzle pieces fitting together. So we got a next target around $12 on this one. This one's looking good after already hitting its first profit target. SFLY. Looking good. As you can see, this one's actually one we've identified at $74 as it broke down below its 200-day moving average. Beautiful momentum. Again, you can see the smart money selling, insiders selling. All of these have these same characteristics of the insiders selling and the smart money indicator telling you that the algorithms are selling off, and beautiful patterns. And again, you can see all of these have been dropping since June. So rather than waiting for the market to go down, we've been identifying stocks where the smart money was selling, where these are inherently weak stocks doing their own thing and are now really taking advantage of the negative sentiment. So SFLY looks great. And then one that's just kind of recent we looked at last week, Best Buy. Again, upward channel. If this breaks down below $70, this could easily get down to $58. So, I mean, that's just a handful of the short setups that we're looking at. We've also got longs that we're holding as well that are going up while the market's been going down. So again, smart money setups with their own characteristics, with insider buying and smart money buying. So just to give you an idea of what to be looking at over these next few days, these are the key things and some of the exciting setups that I'd be following. And again, we're going to be teaching this topic, going through our smart money indicators and searching for some new setups on Thursday at 12 p.m. Pacific, 3 p.m. Eastern. So don't miss it. It's going to be an awesome event. And given the market conditions, I think you'll be able to find some really great stuff that you can be pulling out. And we'll be giving away our smart money indicator as well for everyone who are attending. So again, just simply register by going to acornwealthcorp.com/wealth. So again, I hope you enjoyed today's free market report, and looking forward to seeing you all to learn how to do it on Thursday. Take care and happy trading.